Okay, good afternoon, everybody. Good morning or good evening, depending on what part of the world you're in. We've got a very big audience here today. In fact, one of the biggest we've had. Nice to see you all and welcome to this special seminar. I'm going to be joined shortly by my trading buddy, David Weis, who has written a superb book that was published a few months ago called Trades About to Happen, a modern adaptation of the Wyckoff method. David is a genius. There are two people in my life that have had a great impact on my trading. One of them is Tom Williams, who invented volume spread analysis, which is what I'm going to show you now. And then there's David Weis, who invented the Weis wave, which is very instrumental in my trading and actually helped me win a trading competition last week. So I'm going to show you today, we're going to focus a bit on stocks today, although I am going to take a look at some other markets as well, because there is actually some trades that are setting up right now. In fact, there's some trades about to happen. Perfect. So when David joins us, we'll get him to have a look. Now, just so you know, what I'm doing, I've got several monitors here around me in my trading office, and what I get is I actually get alerts. Now, there's no alerts coming yet. In fact, let's just check. We'll get, here we go. So we're getting some alerts coming in now, all right? So what happens is it's telling me on the Australian dollar, there's a potential trade setup, all right? So this has all been pre-programmed into the Infinity AT platform and Sierra charts. I'm also getting alerts for stocks. So at the moment, I'm monitoring all the stocks in the NASDAQ, okay, which is the main exchange, the NASDAQ, the New York Stock Exchange, the FTSE, the S&P, the Dow, and the Russell. All of those are being monitored as we speak. So, of course, if you're an intraday stock trader here, then what I'm about to show you will be very relevant. But I'm really going to focus quite a lot today on investment trading in stocks. Where do you buy? Where do you sell? Yeah, it's not an easy read necessarily, Victor. I'd agree with you, but you've got to read it 4 or 5 times and then you'll pick it up. It's quite detailed. No, Gillian, the Federal Reserve is very active. It's still pumping money into the system. In fact, if we go to the website, we can see that this month we're going to be putting in another $45 billion. So they're very actively putting money in the market. And you'll see that the very high volume days come in when we've got, as you can see today and tomorrow, large amounts of money. We've got nearly $7.5 billion coming into the system, and they're going to buy stocks, rest assured. They're buying, they're not selling. That's why we're in a bull market. That's why we're in a bull market. It's because professional money are actively buying as much as they can. And when you know which days to look at, yes, Jordan, I will. Absolutely. Nice to see you. I will look at gold, of course, as well. So I'm in the middle of a mentorship course at the moment. And during the mentorship course, a good question was asked of me, which are the most powerful indicators to look for in VSA, in volume spread analysis? Now, for those of you that are new, and I know there's several of you here that will be, we have a website that's got all the information you need on volume spread analysis and what it actually is. I'm going to be showing you some trade setups today, but if you go to volumespreadanalysis.com, the official website, you'll get a lot of free information about how what I'm going to show you works, because I'm not going to go to all the basics today. We're going to focus in on stocks. Okay, now let me ask you all a question. About 2 weeks ago, do you all remember there was a major announcement from Microsoft? Do you remember what it was? And what was it? Microsoft made a major announcment. Hello, Rafal. I didn't see you in here. Nice to see you, my friend. I hope you had a nice holiday in Turkey. Good to see Rafal, my buddy from Poland. Steve Ballmer was retiring. Exactly. Now, how did the market perceive that? Was it bullish or bearish, do you think, on that day? On the day they announced it, was it perceived as bullish or bearish? Were the reporters on television telling us that it was bullish or bearish? Absolutely. It was very, very bullish. On that day that the announcement was made, the Microsoft stock price jumped. It jumped. It went up nearly 3% in the space of a few hours. Now, there are 2 rules that we teach you when you learn our method. And those rules are: weakness appears on up bars, meaning a price bar that has closed higher than the bar behind it, as I'm about to prove to you. And strength appears on down bars as the market falls. Usually the news influences the trader in the wrong direction. In fact, on the news about Microsoft, there was an interview done on the floor of the exchange, and the reporter asked the trader, "What's happening today in Microsoft?" She said, "Since the announcement that Mr. Bourne was leaving, the market seems to have really gone very bullish on this news." And he said, "Yeah, we're all buying. Look at the volume," he said. "See all that buying?" Load of nonsense. Professional money were busily selling on that day. That was the announcement. That's where it happened. This is the hourly chart of Microsoft. We have a signal. In fact, we have a sequence. This is called a VSA sequential trade setup. 1, 2, 3. It starts with very high volume and is finished by very low volume into that same area. And we now know that Microsoft's stock price dropped from a high on that day of 35.18 cents, so $35, down to $31. That's a substantial down move. Now, we have a trading alert service called tradingthemarkets.com. Go to that website, I'll put it in. You will see on that day, right here, on that bar, I sent an alert to all our subscribers. Short Microsoft. As someone said, what is the website? It's www. Just very simple to remember, tradingthemarkets.com. Okay? And you can actually see here all the alerts that we send out. I've got several that are going out this afternoon, actually. And if we scroll down here, you can see some alerts are still in progress because they're longer term. Some have already worked. Some don't work. You know, we were very open about, you know, it's everything. We cover the E-mini, we cover the Dow, we cover the, we're going to be starting the London market soon. We cover the Australian market. We cover stocks, gold, silver. And what has happened, let me go and find this alert that I did on Microsoft so you can actually see the date. And I'm just scrolling all the way down so you can see here. So here is the alert. Okay, I haven't updated it yet, but I'm going to now because I'm now long Microsoft. I've actually bought. I'm in long, but I was short with a put option, which expired 2 days ago, so I was able to close the position out. Now you can see here the date we sent this out was the 27th of August. Okay, so it was a short position, and we have a video. Everything's done by video, so we send a video out explaining the setup, and I can show you the setup. Okay, it's very easy to explain. We had 3 things going on that confirmed, and that was where actually just before this bar appeared, I'd sent the alert out because this bar here was what we call a failed test. But let's look at what actually happened in this stock. Number 1, supply coming in. Now, what do you all notice, let me ask you, about the volume, which is at the bottom of your screen here, which is the number of orders going through the exchange? What do you notice about the volume on that particular bar? Just type in. What do you observe? Just type it in. What do you notice about, Thomas says, ginormous. Ultra high. Yeah, massive. Yao Ming, so several people saying. It's enormous. Yeah, it is. But that's not the most important part about that bar. What do you notice about the range or the spread, which is the high and the low of the bar compared to the ones behind it? So what do you notice about the high and the low of that bar compared to all these ones behind it? What do you notice? Well done, Stephen. You've observed that. I'm going to talk about the closing price in a second. It's an enormous spread. It's a massive spread. Now, the most important part about that bar is these 2 bars here. What do we notice about the closing price on that bar? It closed near the low of the bar. It didn't close on the top. It closed in the bottom 50%. So what does that tell us about that volume? What was being reported on the television was complete nonsense. They were saying that that was buying volume. It wasn't. It was selling volume. Supply has overcome demand on that bar. This is a great opportunity on this bullish news. The uninformed public, some funds who don't know any better, rush in and buy there because they see the news, they perceive it's bullish, and on the television, you're not going to hear the truth. You're only ever going to hear them reporting that the stock price jumped, which it did, that it's bullish and it's going to go up further. But that's absolutely nonsense. When you understand, and we teach you, volume spread analysis, you will realize that the markets are moved by the force of supply and demand. And as David will explain when he comes in, and he's written about it in his book, this is exactly what the hedge funds, this method, the hedge funds don't want you to know about this method that we teach. I know they don't. Because once you understand it, and if you don't believe that I'm telling you the truth, just look at this article here. It says, presenting the secret trading strategy from the 1930s that hedge funders don't want you to know about. The large operator does not, as a rule, go into a campaign unless he, and I'll add or she, sees in prospect a movement of from 10 to 50 points. Livermore once told me he never touched anything unless there were at least 10 points in it, according to his calculations. So writes Richard Wyckoff, the legendary trader who in the 1930s wrote a manifesto that gained him a cult following on Wall Street. His 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, a course of instruction in stock market science and technique, is out of print and somewhat difficult to find these days, although not impossible. In fact, it's on my bookshelf. But hedge fund managers still swear by it, as do I. One of the key takeaways from the book is that if you want to succeed, you have to learn to recognize the professionals and understand what they are doing. That's what those who follow Wyckoff do. They watch the large operators. Wyckoff walks us through the process of how a large operator will manipulate a stock up or down so that next time one sees it unfolding on the screen before his or her own eyes, he or she can react accordingly. Edward is asking a question: what is the risk of holding a position in a stock over the weekend? And the answer, Edward, is this. The risk is that professional money often release bad news or news on a Saturday so you can do nothing about it. And if you're long in a stock and suddenly they decide to invade Syria and the market plummets over the weekend, you're stuck unless you've got a stop loss in. So that's the reason that some traders choose not to hold positions over a weekend. But I'm not one of those traders. I know the market moves in phases. There are phases of accumulation and phases of distribution. All I'm interested in doing is making sure that I buy a stock that is acting stronger than the index in a bull market. Let me ask you all a question. And I'm going to show you something on this chart. And that was Microsoft, by the way. That was the VSA principle. And all of our indicators have numbers. Okay, we all have numbers. And those numbers are now programmed in to a charting package called Sierra Charts and Infinity Charts, which works in stocks, futures, commodities, and Forex, and sends an email alert to tell me when this setup has appeared. And if you see that setup, it's very high probability that it will work. But unfortunately, the news will mislead you. Samuel's asking, what about dark pools? Okay, now these don't affect the main market because they're trading amongst themselves. And the dark pools there's been lots of stories about dark pools, but ultimately the main markets that we see are traded on the exchange and are very open. And what happens when we get an exchange traded instrument like the E-mini S&P or the stocks are traded on the New York Stock Exchange is we get volume. So dark pools who trade amongst themselves do not affect the volume that, and certainly don't affect the VSA principles that we teach. So I don't worry about them. They don't affect my trading because I'm looking very simply for unusual volume on any market. Now, it's interesting. One customer emailed me and said, well, Gavin, I'm a Forex trader and you don't get volume in Forex. But that's wrong. I'm sorry, sir. You're incorrect. You do get volume in Forex. I will show you in the seminar. You absolutely do get volume. It doesn't come from exchange. We call it tick volume. And I use eSignal, who aggregate all the ticks into a volume histogram. And that volume histogram, which I'll show you, aggregates perfectly with the exchange traded volume that comes from the CME group. Look, let me show you the British pound on a 4-hour chart. Okay, this is a 4-hour chart of the British pound. What do you notice about the volume, everyone, and the range on that bar here? What do you notice? Okay, yeah, it is, absolutely. Okay, now I'm going to put up 100 bars on each chart. Right, to the left here, Tim, I will look at the, I've been, that's funny you should say that. Tim, one of our customers, says, Gavin, you've been spending a lot of time looking at the E-mini S&P, but you don't seem to spend as much money looking at the Dow and the NASDAQ. You know something? Yesterday, all day, all I traded was the NASDAQ. I had a great day. I had one of my best days. I tried in the mentorship course. We took a trade in the NASDAQ, a long position, and then I took a short position in the morning in the NASDAQ. Both worked beautifully. But I will look at the NASDAQ is the market leader at the moment. Now, can you all see my chart here? You should see two charts. On the left is the currency futures contract of the British pound. So it's actually exchange traded volume. And on the right, you can see a spot Forex chart using what we call tick charts. Okay, good. All right. Look at the volume on these two bars here. This is called a 2-bar reversal. Very strong signal in Trade Guider. In fact, one of the strongest to go long. Number 57. What do you all notice about the volume on the CME contract, which is an exchange traded contract on the 28th of August at midday UK time? What do you notice? Please type it in. I want to make sure you're all seeing this. Massive. Okay. Now notice it's got 2 green signals on it. Climactic action and a reversal. Okay. And climactic action here. And then on this one, a reversal. So the market's been marked down and then immediately we have a closing price closing higher than the previous bar, and it's immediately followed by stopping volume just here. This is exchange traded volume in the currency futures market traded on the Chicago Mercantile Exchange. What do we all notice, everybody? At exactly the same time, on exactly the same date, in the spot Forex market, what do we all notice about the volume here at exactly the same time? This is spot Forex, no exchange, purely tick volume. Do you all agree with me that the tick volume here is equal to the exchange traded volume on the left? Do you agree with that statement, yes or no? It's duplicated, says Stephen, yeah. The big boys and the big girls are very active. The smart money have become active in the Forex market. They've been buying the market here. Now, we therefore can prove, excuse me talking like a police officer, but that's what I used to do for a living. We can prove beyond reasonable doubt that volume is absolutely relevant in spot Forex. Now, I've got an article, let me find it for you, which is absolutely stunning. It's one of the best articles I've read on volume in Forex. And let me just find that here. I've just got to find the article, bear with me. Ah, there it is. Now, if you want a copy of this article, you'll need to email my colleague Ken. I'm not going to read all of it, but suffice to say, this is an article that was in FX Trader magazine last year. It's absolutely brilliant. It really does discuss here, are price updates a good proxy for actual traded volume in Forex? Okay, the charts I was showing was Trade Guider RT with e-signal, was what I was showing you there. Okay, and the actual conclusion of this article, I'm not going to read it all to you because you can get it. We can therefore conclude that using price updates as a proxy for actual traded volume in the FX markets is very valid and they're talking about an hourly chart. So if you want a copy of that article, email my colleague Ken at tradeguider.com and he will send you it. So it's Ken at tradeguider.com. And also, I'm going to give you all today a copy of my second book, which explains the volume spread analysis sequences that I'm going to talk about here in shortly. Okay, so you can get both of those things from Ken for free. The book retails for $50 on Amazon. You can have it with my compliments because I want to help you. So Samuel says, do you use volume at price to see, for example, support and resistance? Yes, I do. Yes. I call them in my book, Samuel, trigger numbers, which is basically key areas of resistance to price in the past. And as the market reapproaches that level, I look very closely at the volume, whether it's high or low, to see what it's going to tell me. Just one more thing before we go to the stocks and do a stock scan. Notice here at 8 a.m. on the 11th of September, look at the very high volume on this bar. Okay, supply coming in. Exactly the same time in the spot Forex market, exactly the same signal and almost exactly the same looking chart. Look, you don't often see the spot Forex and the currency futures market trading within one tick of each other, but they're arbitrage. They have to do that. Yes, CC, I'm using for my data feed here, e-signal. Okay, I'm using their data manager, and I'm using for spot Forex, the GTIS platform, which measures, it takes 200 interbank feeds and produces a volume histogram, which is what you see at the bottom of your screen. It's the best volume data for Forex, I believe, in the business. I've never seen anything as good. It's about $50 a month, I think. Not expensive. Very, very good for Forex traders. And I use the futures markets together with the spot Forex markets, and I watch them together. Because when news comes out, the spot Forex market moves slightly quicker sometimes than the futures market, allowing me to get a position in futures because I can see where the spot's going. It's only a matter of 6 or 7 seconds, but it's an advantage. I will do a webinar on that. Yes, I will at some point. Okay. So is there any questions so far? We're going to go and look at stocks now, but is there any questions on volume in Forex? I was asked to cover this today, and I've now done this. Is there any questions? And that article, yeah, if you email Ken, he'll send you it. Have we got any customers that trade Forex? Hundreds, Phil. In fact, let me show you one guy. This is a guy called Tim Raymond. I don't know, you should all be able to see my screen here. This was in a magazine a couple of years ago. It's an interview with the solitary trader. Now, Tim Raymond basically won, not once but twice, a live trading competition with real money. He got, in his last win, it was 44% he made on his account in 12 months. And he's one of our customers. And he's a Forex trader. His name is Tim Raymond. Again, if you want this article as well, I'm not going to read it all. You can email Ken and he can send it to you. Suffice to say, Tim was taught to trade by the same person I was. He says here, in early mentor, in 1998, Raymond had the good fortune to connect with Tom Williams, the creator of volume spread analysis. I rang him and he was very reluctant to sell me his software. He said trading is very difficult, you know, but I insisted and agreed that I would pay £5,000, about $8,000, in installments, Raymond says. These days, if I'm asked by someone who is starting out in trading for advice, the first place I send them is the Trade Guider website, which is our website. For me, it demystified the markets to a great extent. That's what we do. We demystify the markets. Okay, Laura asked questions. While still in the Forex markets, I think you meant, can you show us the setup for the AUD, says Laura. Yes, I'll happily do that. How does the volume work with the FX pairs? Well, that's what I've just shown you there, Whitney. It works. This is the pair. The currency pair I'm just showing you here is the British pound versus the US dollar. But Laura was asking, could I look at the Australian dollar? Because I can. It doesn't make any difference which market I look at. Do we notice, does anyone here notice any ultra high volume, by the way? Anyone happen to notice any ultra high volume on this chart? I'm short. Yes, I'm short this contract. Yes, John. Yeah. Anyone spot, Laura, you asked the question, do you spot any unusual volume activity on that chart? Okay, now that is a currency futures contract of the Australian dollar. This is coming from the CME group. It's got a big red signal on it, and I'm short. Okay, now I'm going to stay short, absolutely, because this will go up on no demand. This is a trade alert that I'm just about to send out on our thing. Now, is it against the trend? It is, but this bar here is what we call a gotcha bar. It's taken out all prior support. Now, let's have a look at the same pair now using the same time frame, but in spot Forex. Okay, so this is the spot Forex contract of the same pair. Does anyone happen to notice the same, exactly the same type of volume at exactly the same time? Proving beyond reasonable doubt, excuse my police instinct there, but I love to use that term because it is provable. Look, there's our signal, okay? It's the trap up move in the 6A contract on the exchange, the CME group. Here, exactly, we see the trap up move that we see here on the spot Forex. Even here, we've got no demand there. So, Laura, that is, I will stay in this position until my stop gets taken out, which is right here on the close of that bar. Okay, on the closing price of that bar. If that goes up through there, it means we're going to travel back up and look at the top of that bar on no demand. But I use something called a trailing stop. If you look at this bar here, that's a big move down. Look at it on a smaller time frame. You can get in the trade much earlier. You look at a 5-minute chart, okay, here, and you'll see just prior to the move, we had the same indicator on a 5-minute chart. So before the move happened, it was indicating weakness was coming in. Okay? And on a 3-minute chart, here was the chart that I used to actually enter the trade. You can see just here, the market was going up, and then we had this massive, you see the volume on that bar was very, very high. I'll put 70 bars up, and I can go and show you. And you can see right before the move happened, we had a very big trap up move. Okay, and I got into the trade as it began to fall. So once it took out the support here, I had a sell order in, and it's carried on going since. Now, there is some support coming, by the way, just for those of you that are looking at this, just here. But if this low of this bar gets taken out, I'm going to add 4 more contracts to my position, because at the moment I'm seeing some support, but there's a gotcha bar in the background. Okay, now we weren't going to be talking about Forex today, but you've asked the question, and there it is. Zach just asked, why don't we have this VSA on multi-charts? We do have it on multi-charts. It just doesn't work properly. We are working on it. Hopefully that will be my next announcement to make, is that we're releasing this for multi-chart, Zach. If you had the alert service, when would you get the notification? After, it depends whether you're a swing trader or a position trader or a scalper. The alert takes 10 minutes to film. That's usually, sometimes it's less. It then takes me 1 minute to email 100 people, and we've got 600 subscribers now. So it takes about 6 minutes for the email to get to everybody. Okay, so usually if you're in a very fast moving market, when there's a lot of volume there, you get the alert, but you see, I don't always trade into the high volume. I wait to see the reaction to it. So a lot of the trade setups that I send in the alert service are based on trades that are going to happen in a few hours time. They're not, you see the higher volume, but that's only the start of the trade. It's only the start of the setup, because when you understand volume spread analysis, you're going to learn that the start of a trade setup starts with ultra high volume, but it's completed when the market goes to that same level on very low volume. Let me give you, I'll go back to the Microsoft chart and show you that, what I mean by that, okay? Because that sometimes does confuse people, but it's not confusing when you understand VSA. Let's close the Aussie dollar down. Laura, I hope that answered your question on the Aussie dollar. Now, we can see here 3 things going on in Microsoft. Number 1, the news is bullish. So they mark the price up. The volume comes in, absolutely enormous, as you can see. Okay, absolutely massive. Now, that's the first part of the setup, but the completion of the setup took 8 hours to happen. All right? Here is the second part of the setup, the upthrust. Notice that on this massive volume, the next bar closed lower, but the market maker on the exchange wants to keep selling stock to the uninformed public. So he holds the market up. But look at the volume now on that upthrust. There's hardly any there, and that's because about 80 to 90% of the trading volume that you see in the markets comes from the professional side of the market, what I call the smart money. If they're suddenly not active in a rising price, you get low volume into the same area where you had the selling. So here is where they've dumped onto the market. So you've got all these buyers that have switched on CNBC, they've switched on CNN, or they've switched on BBC, and the news has come out that Microsoft stock's price is jumping and everyone's buying. And they look at the chart and they say, crikey, look at that volume. And the price went up, look at it. It's gone up from 32 to 36 nearly. Wow. And all the analysts are saying, well, we think on this news, it could be at $50 in a few weeks. So that's how the market works. So the human behavior and human beings who don't know any better, who don't understand VSA, are thinking, crikey, I better get in. So they start to buy. Well, of course, professional money that have been holding the stock down here decide this is a great opportunity to sell and then buy it back later at a lower price, which is exactly what happened. So the completion of the sequence in the trade alert that I gave, actually in this case, I had to wait 8 hours before the alert went out. 8 hours. I was sitting there thinking, I'm not going to send an alert yet until I see confirmation of the weakness. Now, we must always read the dialog boxes, because as part of our package, once you subscribe to tradingthemarkets.com, we give you one of our software plugins for a month absolutely free with data. You get the data included for stocks, futures, Forex, whatever you want. So you can follow the alert through, because when I do the alert, I will often say, as will my colleagues that work with us on the VSA panel, they'll ask you to look out for what's coming in the future. So you need the software really to identify the signal. Now in Microsoft's case, it was number 198, no demand. What is no demand? It's an up bar with volume lower than the two previous bars. Well, we can see that, look. So the market maker here is basically marking the price up. But look at the volume. Price has gone up, volume's gone down. What does that tell us? Yeah, it tells us that the professional money are not interested here. They're not interested in higher prices. All right, and when that happens, that's a signal. They're alerting us. Hey guys, there's a trade set up here. We are not interested in higher prices. Okay, we are not interested in higher prices. And as a result, of course, the price must fall, which it does. So no demand is always important when you've got what we call weakness in the background, not strength. Weakness in the background. What does that mean? Well, let's read it on the dialog box. Study the background carefully and look at the trend. This indicator works best when there is weakness in the background. Okay, there's the weakness in the background. Okay, it's right there. So the dialog box is absolutely correct. Okay, future. The next bar should close lower, or be down as we call it, or close lower to confirm the indicator. What happens? It closes lower. It's confirming the weakness that's in the background. That's the VSA setup. The software, Samuel, is not usable on the iPad, unfortunately, but the trading alert service that we have is. The videos play on iPads, they play on Samsungs. Absolutely. Absolutely. Yeah. What does the alert look like? Okay, let me, I think I'm not sure if I can play it from here. Yeah, let me, I think you can. If you go here, if you click on example alerts, all right, just click on this one here, right? So I'll send this all to you. This is exactly what the alerts look like, so you can actually go and see for yourself. Someone said, what do they look like? I won't play it in this seminar, there's no need to. But if you go to the archive there, click on the access button, okay? And you'll see here a video. Click on the video player. This plays in iPad, it plays in iPod, it plays on Samsung, and it comes up with a video. You'll often see, sorry, you'll see that often I'm in a live trade, as I was here, where I've actually taken the position myself as the alert comes out. In this instance, I went long the S&P up to 60, and I made 6 points on the trade from the time I took the alert. So you'll see my live account, where I've actually taken the trade myself with a live trade. You'll see where I put my stops. That's certainly no recommendation where you should put yours. But some of the alerts we don't always trade ourselves. Let me be very transparent. There's some alerts where we send them out, but we don't trade them. We don't trade all of them. We trade about 50%. Okay, and I'm talking about our fund. So basically, the alert service is there to teach you. It's not to tell you where to take a trade at all. These 10-minute videos are the quickest way to learn the VSA method, in my opinion. If you want to learn this method quickly, this is the way to go, without doubt. From the people, from the 600 and something subscribers we've got, the feedback that we've had is that these 10-minute clips in live market conditions are by far the best way to learn. So when I talk, going back to the Microsoft trade, okay, about supply coming in, then followed by no demand here, we can see that the statement that I make, that you get ultra high volume followed by low volume, okay. Laura's asking, what do the red and green triangles represent? They represent imbalances of supply and demand. And we're paying most attention, Laura, to the ones that are on very, very high volume, like we call it Yao Ming volume, followed by very low volume. If you read my book, Trading in the Shadow of the Smart Money, which is available at www. In fact, you can download the first 4 chapters from this website. In fact, I better make sure that the website is still active because we had a denial of service attack fairly recently. If you go to www.tradingintheshadow.com, let me just get rid of the drawing tools. Okay, and if you click here, you can download the first 4 chapters of the book for nothing. And if you like it, then you can go here and buy the book. But it's going to explain in a lot of detail pretty much everything that I'm talking about here right now. Does it talk about market manipulation, says John? Yes. Yes, it does. Absolutely. It talks all about it. Stephen, I used an options trade to trade Microsoft. I didn't use a standard buy and sell order. So I bought a put. I had a put option. Okay, that's what I used, and which has now been exercised. So I've made my money. I'm actually thinking of going long on Microsoft at the moment. In fact, I know Tom has already put a position on. I will probably put another position on shortly. But yes, I used options. Thomas, the fund that we're managing here is not publicly available at the moment. It's being privately traded, and then once the results are published and audited, which will be towards January of next year, then we'll make the fund public. But at the moment, it's not a publicly available fund. Yeah, so Stephen, hopefully that's clear. With Microsoft, I trade options because I think options are if you understand how to trade options, you can actually reduce risk and you can hedge as well. There are various ways of managing risk when you're an options trader. So yeah, the website there is just www.tradingintheshadow.com, and if you click that button there and just register here, next week we're starting a chart of the week service here on this website where we send out a weekly alert for free. So if you register in there, you'll get an opportunity to get that alert. It starts next Monday. And it's going to start with an alert on Apple, just so you know. So that's what we're doing. All right, so let's now go and do a stock scan. Now, I mentioned earlier, and when David joins us, I will get David to show us and talk to us about the Wyckoff method and how Wyckoff, in his day, would actually select stocks that are acting stronger or weaker than the index. Before I start that, though, let me ask you all a question. Let's just go to the E-mini S&P for a second. All right. What is the trend in the E-mini S&P looking at that chart? What would you say? What is the trend of price? Chris, the ASX alert is going out today. In fact, we're going to film that straight after we finish. Now you asked. I wanted to wait to see what the futures market did, but we've got 2 alerts on 2 stocks going out, Chris, which you'll get in the next few hours. It's definitely in an uptrend, isn't it? Now, does anyone spot Yao Ming, the ultra-high volume bar, anywhere? William, nice to see you. The trend is up and away. Yes, definitely is. And we got a signal a few weeks ago, look, just here. I'm long S&P. I'm bullish. This is going to, I can tell you where this is going. 1768 is where this market's going to go in the next 2 months. Point and figure projections have been very accurate on this. We'll break 1700 next week and then we'll go up. Okay. Yep, there it is. There is a shakeout. Okay, it's got a signal on it. It's the news again is bad here. By the way, the news is never going to help you. The media are not going to give you any help at all in your trading. Trust me. The only thing that's going to help you is if you can learn to read a chart correctly. So here we notice it's a down bar. All right. So the price bar has closed lower than the bar behind it. We can all see that. But notice the spread of the bar is very wide, and behind us We have a downtrend. The market's being marked down. Now, on this week of the 12th of August, you will have been told to invest in a safe haven. Can anyone remember what that safe haven was? Can anyone remember what the safe haven was for traders and investors around the world? Yeah. Okay, so it was gold. You're absolutely right. So let's put the two charts together then, see what actually happened. So here is the week of the 12th of August. Okay, here's gold on the right hand side. Let's maybe put 200 bars up, that's fine. Anyone notice any Yao Ming bars here? Look at the same week, look at the volume. Ultra high volume in the stock market, ultra high volume in gold. Okay, you should all be able to see that. But our signal is telling us here in the stock market to buy. It's a sign of strength, SOS. SOS 34, sign of strength. In gold, right at the top, we've got two signals. Selling pressure here, down here, on this very high volume bar here, and there, the next bar, the buying climax. Sign of weakness 1. Very serious sign of weakness. In the mentorship course that I'm doing this week, we've seen examples of where we get buying climaxes come in. This is going to fool you though. On this day, the 12th of August, okay, on this week, the news from the big institutional banks is going to wrong foot you, I guarantee. Let me show you. Here is the 8th of August, 2011. This is the headline. The large institutional banks that are selling to you are telling us here that we're going to raise our forecasts on the price of gold. In the next 2 weeks, gold went up, but it went up on low volume. Professionals, the banks, they're already selling. They're selling to you, the public, the people that don't know any different. And this is how the markets have to work. There has to be willing buyers at market tops. But when you understand VSA, which is what we'll teach you, and when you, for instance, are subscribing to our alert service, we'll alert you to when we see manipulation happening. Do I think the gold market is being manipulated? That's a great question. It's not whether I think it is at all, really. It doesn't really matter. The fact is, mainstream media won't report this, but in England we have a newspaper called the Daily Telegraph, which is a mainstream newspaper. And finally, one reporter, Thomas Pascoe, who's got my book, has reported correctly that the price of gold is absolutely being manipulated on a daily basis, and so is silver. So that's a proof. I mean, someone said to me, Gavin, I was in Poland. I did a big presentation to 1,000 traders in Karpacz, and a guy came up to me afterwards who worked for a bank. He said, listen, Gavin, he said, I love your presentation, but the markets aren't manipulators. He said, they're regulated. You know, he said, we've got regulators. And I said, listen, did you hear about the story of Barclays and LIBOR? And he went, oh, yeah, but that was an exception. I said, rubbish. Did you hear about Barclays and the energy market in California and JP Morgan? And then he looked at me and said, no. I said, well, here's the headline. Energy market manipulation, oil market manipulation, why not gold and silver? And then he looked at me and said, oh, you might be right. I said, but that's good news. I said, don't be a conspiracy theorist. If you can read volume and you can see when professional money are actively selling to the public, you know that, you become a smart money trader. You become a professional smart money trader. And once you learn this, you have this knowledge with you for the rest of your life, just like I've got. And it's knowledge that will be with you, it's knowledge that will be with you for the rest of your life. Okay, let's go and have a look then at what's going to happen at the open of the market, because is there any questions, by the way, about a shakeout or a buying climax? Okay, this is buying from professionals. This is selling from professionals. That's how the market works. Is there any questions? Any questions so far before we go and have a look at some live charts? And we're going to see if we can take some live trades now. What about a test? Well, you know, you get tests all the way up in this market. You've got reversals, but you've got test. I mean, that's a test there. I mean, if you want an example of a test in a rising market, there's one right there. That's, I mean, Julian, just go and look at the weekly chart and look at that signal right there. That's a test. It's a down bar. It closes up near the high. The volume is fairly high on the test, but the next bar closes higher. Look here as well. We've got a test, and we're seeing the result of that at the moment. Hiran, I'll let David do that when he joins us. Can I describe point and figure? Let David do that. He's an absolute genius when it comes to point and figure charting. So let David explain that when he joins us in a few minutes. He'll be here in about 5 minutes. So a test is very simple. It has to have the following criteria. You've got to have strength in the background here. And in fact, this here is a great example of what we call no supply test. Because the market falls, but look at the volume, everyone. There's no volume on it. Professional money have bought in the background, so they're not interested in lower prices. So the volume is non-existent. And the next week, we close higher. And that's the result of what we call a successful test. Hi, Pedro. Nice to see you. All is well, Pedro. Yeah, it's all going very well. Okay. Right, let's go and have a look. We've got the market opening in a minute. Let's go and have a quick look and see what's going on. Okay, so we've got this unusual volume bar on the Aussie dollar. It's an ultra high volume up bar. Let's have a look at the 5-minute chart. Yeah, it's a difficult one to actually identify. I think we've got David with us now. Hello, David. Good morning to you.
Hello. Can you hear me?
Yep, I hear you fine, buddy. How's Boston this morning?
It's a little warm today. I thought we were heading for fall, but today it warmed up for some reason.
Well, we've got cloud and a bit of rain and typical British weather, basically.
Yeah, it sounds like the norm.
Yeah, I was going to say, nothing's changed. Nothing's changed in England, David. Yeah, no, I've just been talking a bit about your book earlier on, so I put that up there so everyone knows about your book, and congratulations on that. It's brilliant. What we're doing at the moment, David, I've just been taking the audience here through some of the key principles of VSA. And what I'm going to do in a minute, I'm going to do a live scan. In fact, we can do it now. The market's just about to open. So obviously, I'm looking for some trades right now to see if there's actual trades. But what I wanted to talk about today, the purpose of this webinar, is to talk about the Weis wave, of course, but to also talk about stock selection. Now, in Wyckoff's day, obviously, he always said you look for the behavior of the stock that's acting stronger or weaker than the parent index. Now, I don't know if you've ever seen this, but we've got a scanner built into our end-of-day software that actually scans for the Wyckoff method of finding stocks. And I'm not sure if you've ever seen this, but I'll show it to you now, David. So what I'm going to do is do a stock scan live, and then I'm going to hand over to you so you can talk to us about how you look at a stock and try to find a stock that's ready to move. And also, maybe you can show us in the live market. The Australian dollar looks very interesting today, so that might be one you want to look at. What is the Weis wave? How does that actually work when you overlay it with VSA? And also, a bit about point and figure. Not too much, don't complicate things, but I talked earlier that I'm a subscriber to your newsletter, and I use point and figure charts myself. And they very accurately seem to predict where the market's likely to go in the near future, which is, of course, what everyone wants to know. So that's what we're going to cover, David. Can you see my screen, David? Just here?
Definitely.
Okay, so what we're going to do now, I'm going to scan my Metastock files, and I'm going to scan the S&P 500. So the first thing we're going to do is we're going to load the parent index of the S&P. Okay, so there it is. We can see it's in an uptrend. So I'm going to be looking for stocks that are acting stronger than the index, basically meaning that as the index falls, as it does here and here, I want to look for stocks that refuse to fall with the index, meaning they're being supported by the smart money. I'll make sure that the data's up to date, which it is. And I'm going to add a complete folder, which is the S&P 500. John, the data feed I'm using is Metastock. We have a special offer with them at the moment. It's $25 a month for the end of day data. And if you sign up this week, they're giving you 3 months for the price of 1 month. So for 25 bucks, you get 3 months worth of data. It's a very good deal. Yeah. This is what Tom uses as well. So we click on next. Now, I'm not going to change the parameters that are preset in the program because they're very accurate. There's no need for you they're all pre-programmed. You don't need to reset these parameters. But suffice to say, at the right edge of the chart, I'm going to look at 2 reference points. And actually, in honor of David, we're going to call this David Weiss scan. There we go. Hopefully it's going to find me a trade. In fact, David, I'm going to cheat here a bit. I've actually found a really good stock I want to trade, so it's already been done. So what it's doing now, we're going to scan the entire portfolio, and what you can see it's doing at the right edge, it's looking for stocks that are refusing to fall with the index, which is very important. So, David, while I'm doing the scan, can you just explain what criteria do you look for when selecting a stock to buy or to sell?
Well, I don't have anything quite this sophisticated because most of my trading is with futures. But I have a couple of tricks. I use TradeStation, and it does have some scans that have been pre-programmed for users, and 2 of those that I like to look at. One is the bullish engulfing, which is a candlestick pattern. I'm sure everybody knows what it means. It's an outside upward reversal. For the most part, there is a more specific definition than that. And the outside, and then there's the bearish engulfing. And I often will scan for which stocks have that pattern at the end of the day to see if those situations may coincide with a spring related to bullish engulfing or an upthrust related to bearish engulfing. That's one thing that I do. And of course what Wyckoff did is essentially what you're doing here, Gavin, and that is identifying those stocks that are in the strongest position in an uptrend of the market to look to buy, and in a down market to find those, identify those stocks that are the weakest in order to look for selling candidates, shorting candidates. Otherwise, if I didn't do either of those, then I might just have a group of stocks that I would look at every day. Some of the stocks that I like to look at, obviously U.S. Steel, Goldman Sachs, Cliff Natural Resources, Apple, so on and so on. But there is a group that I do look at, and it changes from time to time, that are pretty good movers, and I look for, one of my favorite things to look for is springs and upthrusts. And when you're dealing with daily and weekly charts, it doesn't take much effort to just eyeball a group of stocks and look for springs or upthrusts. Anyway, that's it in a nutshell.
Yeah, well, David, interestingly enough, I also follow some of the stocks that you follow, but I do this scan usually twice a week, and what you'll see here is that we've now got a set of results. So we've got 10 weak stocks, and we've got 10 strong stocks. Now, if we look at weak stocks first, okay, I'll pick on this one. This is a really clear example. In grey is your parent index, and here in the colour is the stock. What do we notice first of all about the volume, everybody, on this up bar here and here? What do we notice about the volume on this up bar? Just type in, what do you see there? By the way, Pedro has made a comment here. He's a subscriber to your newsletter, David, and to Tom's newsletter. Hopefully, Pedro, you don't mind me reading this out. I'm a subscriber of David's newsletters as well, and because of his experience in the markets, usually I compare my reading of the market with David's analysis and Tom's newsletters. I strongly encourage other traders to do the same. Thank you, Pedro. Appreciate that.
Thank you, Pedro.
Very nice. Now, what do we notice about the volume? Absolutely massive. And then look over here, look, right, we see more supply entering the market. So this is selling, not buying, but the news up here is going to be bullish. Now, what happens? The parent index has been going up, but what's been happening to this stock? It's weak. It's got no demand after weakness. So if you're going to short a stock and you like to take, say, put options, this would be one you definitely follow. Let's have a look at a strong stock. Now, I'm going to give my subscribers to tradingthemarkets.com, who are all in here, or most of you are in here, a clue as to the next alert, okay? Now, this is Netflix. Now, again, you can see this stock is acting, if I remove the parent index now, it's acting much stronger than the other stocks around it. It's making, as the parent index tried to fall here a few weeks ago, this stock refused to fall with it. And if we look at the weekly chart, we can clearly see why. Right in the background here, we've got a beautiful test, which Wyckoff always looked for, testing in an uptrend. And sure enough, we make higher highs every week since. So this stock is not falling when we had the correction in the S&P, which was quite a decent correction. This stock wouldn't fall. It's bullish. And any one, if you've got the end of day program, and I know a lot of you have, any one of the green indicators that appear in a weekly chart in an uptrend, I would call a buy signal. I wouldn't hesitate, because you can see they work. And you've got strength in the background. Look, here, down here, you can see on this bar, no supply, and right next to it, stopping volume. Okay, we've got David with us. David, I'm going to give you the screen. Now, we've got a lot of our customers in here from tradingthemarkets.com, our trading alert service. Several of them have asked me about the Weis wave for MT4, which is the Forex platform. I know we've now approved that and we've got that, but a lot of them are asking, what is the Weis wave? Why do I use it? Why does Tom Williams use it? Why is it valuable? So perhaps, David, if I could give you the screen now, and you could explain exactly how you use the Weis wave, and I will then show you how we use it with our alert service, so you can see how I use it. So there you go, David. The screen is all yours, my friend. Over to you.
All right. I don't see it yet.
Yeah, you should see it.
Oh, okay.
There you go.
You see my screen?
Yeah, take a couple of seconds to come up. Yep, there it is. Got it.
Well, I'll show you. Let me put up a chart real quick. I'm going to put that. This is a March 2014 sugar daily chart. And I'm just going to, I'm setting it up. And with sugar, I use a 0.05 retrace. And the volume scale is in hundreds of contracts. The theory behind the Weis wave is, and I've said this numerous times, so I'm sorry to be repeating myself to some of you who've already heard this, but it's my contention, and I'm sure Wyckoff felt the same way, although he never put it quite in these terms. But he did recognize, and he did say in his writings, to think in waves rather than thinking in bars, to think in waves, because markets unfold in buying and selling waves. All right, and so if you subdivide price data into equal bundles of time called bars, price bars, 5-minute, 20-minute, or so on, you can still see the trend of the market. Like this is the Australian dollar this morning. This is a 500 tick bar chart. I'm using a 3-pip wave, and you can definitely see what the trend is. But if I put the actual volume underneath it, I don't know about in this case specifically. Let's take a look and see. But many times you don't see the true force of the buying and the selling because it's all lost in time. It's all chopped up. For example, you have no idea how severe the selling was on this downwave in here from this volume below. It all merges into what we've been looking at. It's what I call the tree line on the horizon. If you've ever driven down the highway and off in the distance you see a forest, you can't get much definition of where the high volume or the low volume points are. It's just a big line, a tree line. Well, that's about how volume looks on a chart most of the time. Not always. There are obviously some points where you can discern some good information from just raw volume. But I think I'd much prefer wave volume. And this is cumulative. It's adding up the individual volumes per wave. And it tells me a much better story. Like over here, let me look at yesterday on the Australian dollar. Yesterday morning, we had a nice spring. Look at the volume as we broke underneath this support. Look what the wave volume shows. And here's the actual volume per tick bar, which is fair. It's not terrible information. But then look at the demand that came out on this rally. You get no indication of how much volume, how much buying took place on this upwave if you're just looking at raw volume. It doesn't stand out. But the cumulative volume tells you most overtly apparent that the force of the buying has overcome the force of the selling. This is the biggest amount of upwave volume on this chart to the to the left. And then on this pullback, the selling pressure drops off considerably. And that's how I use this. When I see a bullish change in behavior like this and a pullback on much lower volume, I get long. Of course, I also, one of my other trading approaches is to look for springs and upthrusts. So seeing the market go underneath this support without much selling pressure and then bob right back up, I know that the odds favor that this is a spring, and I can buy at the danger point where the risk is the smallest, put my stop here and say, prove me wrong. And it works out nicely. Now, I know that today you're looking at daily charts. I want to show you a daily chart that I've been trading. I really haven't traded it much. I've been holding it. And this is March 2014 sugar. The nearby month is October 2013, and it's going to expire in another 2 weeks. And March will become the front month, and it's also new crop sugar. And notice we had upwaves here on 81,300, 153,500, 118,000. So there was a lot of demand on this upwave. But then it comes off, and look here, 154,000 contracts on this downwave, a very large effort of selling, and it didn't make a new low. And then right here, it was down on 104,000 contracts and didn't make a new low. And on this last pullback, it's only 39,000. So I saw that and decided that this was a place to go long sugar, March 2014 sugar. And I'm still holding it. So that's trading with a daily chart, which you can definitely do. I'll show you another interest. Gavin was showing you some stocks. Let me bring up another chart. One of the stocks that I'm watching is TLT. This is 20-year plus Treasury bond ETF. So if bond prices rally, this stock will appreciate. There's the opposite, which is TBT. If bond prices go down, this stock rallies. This is the short trade. But I'm looking at the long trade because I think that we're probably at some kind of an intermediate extremity on the bonds and 10-year note futures. So I think this stock ought to do better. Let's take a look at the Weis wave on this chart. For most stocks, I use a 10-cent wave. I won't put the line on this chart. I'll just put the volume down below. This is 0.75, so I have to format it to 0.10. So you notice that, first of all, we had a bullish change in behavior in late August as the market rallied off of this low. Let me make this chart more immediate. So right here we had the most amount of upwave volume since, let's see, well, I don't know how long it's been since we had that much upwave volume. That's a lot. That's certainly probably the heaviest upwave volume since we topped in May. That's for sure. So that by itself is a bullish change in behavior. And then on this pullback, like on the sugar chart, look how much effort there was to take it down. A whole lot of selling. And it didn't make a new low. And then it comes down again on a one-day down wave right here. And there it is. Well, it didn't show up. But look at the volume on that down wave. It's minuscule compared to what we had here. And you can also see that yesterday's low is a minor spring of last week's low. So I think this is an interesting candidate. Now, this doesn't have much to do with Gavin's approach to looking at those stocks that are stronger or weaker, because this is a stock that's related only to the bond market. A lot of the stocks that I'm interested in, that I didn't mention a moment ago, are related to futures, you know, ETFs, ETNs, and so on. I mentioned sugar. There is a ETN for sugar. The symbol is SGG. It looks exactly like the sugar chart. The only problem with this stock is it doesn't have a lot of volume, but if you're not trading millions of shares, you're okay. But if you're just trading a few hundred, it works fine. And it has almost the same look that the March futures. You see how much demand we had, and then all the big effort to take it down, and so on. It's essentially the same chart. Another one that I'm watching is JJC, which is a copper proxy. I don't know what that's called, but anyway, copper did not look too great to me, and you see it's coming off. This isn't the best wave size for that chart. But anyway, there are lots of commodities or futures contracts that have an equivalency with a stock that I do pay attention to. Of course, the most famous one, or one of the most famous ones, is GLD, which tracks the gold market. I thought gold looked like it might be in a spring position after yesterday, but for whatever reason, we've gapped down today, I guess, off of events pertaining to Syria, but I'm not sure. Anyway, and another one that I like a great deal is SLV. It tracks silver. The only problem with these charts is they have all these gaps because they don't trade 24 hours, and the underlying commodity does trade 24 hours, so they're always trying to catch up. Anyway. Well, Gavin?
David, could you take
have I done enough here?
No, just a bit more first. I'm not going to let you go that easily. Just a quick one. NASDAQ. Can you take a look at the NASDAQ for me?
Oh yeah, that's an interesting one.
Yeah, because
I'll still look at the September, even though we're probably rolling into December. Let me get rid of this. I think I use, with the NASDAQ, I use a, let's use a 1.5 retrace. No, that's not too sensitive, is it? I'll make it a 1-point retrace and see if we have, yeah, there. So you can see this morning, overnight, late yesterday we did this, or last night, we rallied to a new high, we got hit, and now this morning there was a lot of selling right here, unusual amount of selling, and that's put the market on the defensive. Let's take a look at the 5-minute chart and see how it looks. It's a little different. 500, I think I'll change it to a, go back to the 500 tick bar chart on it. Got better data. And you see that the tick volume, the actual volume per bar, just doesn't give you any information at all. But the wave volume definitely does. Let's take a look at the daily chart, because that's the most interesting thing related to NASDAQ. NASDAQ is the leader, of course. It's stronger than all the other indices. And what's made it so strong, one of the things is that this whole correction from the August high held on top of the May high. The S&P has just come back up to the May high, just gotten above it. So NASDAQ is definitely the leader. And you had very strong upwave volume on this liftoff out of this trading range. And it's not showing any willingness to come off, just a little narrow inside range today. It still seems quite strong. What are you looking at on NASDAQ?
Well, I'm looking at a smaller time frame. I'm looking at the 5-minute chart, and we got a bit of a reversal at the bottom there. We just had a...
Oh, yeah, I see it.
Yeah, we had a nice reversal. I'm looking now for a test, basically.
Yeah.
No supply. I'm going to go long about 31.76, I think, if it tests that level. But there's definitely, I'm on the big time frame. If you look at the 15-minute chart, David, we've got a very clear shakeout right underneath us. Widespread down.
Yeah, I see what you mean.
Yeah, so that's I'm looking. I'm going to put a long order in once we come and test that. I mean, it may just take off right now. It may actually just push straight up. But yeah. But certainly there's buying down there. That's what I think. I can see some buying down there.
Yeah.
I think it'll accumulate down there around 31.74 approximately. That's what I see. So I'm looking for a test really. A test of that level. But what does the Weis wave show us on the 5-minute chart and the 15-minute chart? Can you show us?
Well, let me put the wave line on it. Maybe that'll be more helpful.
Now, if we close above the high, which is 3180.75 in the next 5 or 6 minutes, then that will be a strong reversal. That would be a very strong sign of strength.
Well, I mean, you see, this is the, let me make it the 5-minute chart again. I mean, we had a huge amount of volume. And we got a lot of volume going right back up.
Mm.
We're approaching the first resistance area. That's the ice line that we fell below. It's not too straight, but it looks like we're going to go right through it.
Yep, that's exactly what I'm thinking. This looks like it wants to close on the...
I suppose this was just a washout, a shakeout. Look at there. We're already back above 3180.
Yeah, I've got a big sign of strength here at the bottom here. It's a very strong signal. And this is one of these signals that when you see it, a selling climax and a reversal like this will get tested again. There'll be a setup here. There's no doubt about it.
Yeah, here's the 2-minute chart, just to get a little more data. But it never really pulled back. I mean, it's just very strong. This is the way the NASDAQ has been acting all the time.
Yeah.
Never really giving much ground. When it does, it comes right back up.
Yeah, I always find at 9 o'clock in the morning, like around now, Chicago time,
yeah,
they whipsaw the market. So I've got a buy signal actually on my chart here. And but my concern is that they'll mark it up and then mark it straight back down to that level. And if it comes back down to that level on low volume, that's where I would go long. And then I look at the Weiss wave then to see on the down wave if we've got less selling pressure in the market at that same level. And if we have, we have a signal called no supply, which confirms the Weiss wave, and that's where I would buy the market.
We got a little channel here. Let's see if we're at the top of that.
And gold is falling quite rapidly as well, David.
Yeah, I know. Let me see if I can. So we're almost to the top of that up channel.
Yeah.
For whatever that's worth.
I think we've got a setup on natural gas as well, David. NG.
Yeah, let's see.
I think if you look at it, I think we're just about to have a hidden up thrust with a 2-bar reversal in the background. So that potentially...
You're looking at a 5-minute chart?
I'm on a 15-minute chart of natural gas, the NG.
All right, hold on. Let's see, I think I used 0.001. Oh, yeah.
See? I'm getting lots of email alerts at the moment coming in as well.
Let's see the 5-minute chart. Oh, look at that.
Mm-hmm.
I look at crude, I look at heating oil, but I rarely look at natural gas. It's a good market.
I've been doing trade alerts on this, David, for the last 2 or 3 weeks, and they've been
really?
been spot on. Been very easy to read. Very easy to read.
Huh. Well, you can see on the NASDAQ now that you had, this is a 2-minute chart, you had 8,200, and now you only had 2,300. So maybe it wants to pull back on the NASDAQ.
Yeah, I've actually just got an email alert to David on the NASDAQ, funnily enough, which is showing that, it wants to try and pull back a bit, is what it's saying here. Let's have a quick look.
Let's see. We draw this line. That's the ice line that we rally back above. Yeah, the demand tired on that last upwave. First upwave lasted 30 minutes. The second upwave lasted 10 minutes. It's a much smaller wave and much less volume. But now we've come back on top of the high of the first upwave. And the trend line. So this is a spot where it has another chance to make another new high. So far, there's only 1,000 contracts on the pullback. You can see.
Okay, Grigory, who's out in Russia, who's our programmer, David, I'll introduce you to him at some point. He said go and look at coffee. He thinks coffee is setting up for a trade.
Coffee, I agree. I was looking at coffee.
Yeah.
I mean, it caught my eye. Let's put it that way. It's not a very sweet market. It's a volatile, dangerous market. But I noticed yesterday we had that big lift-off, but we've come slamming back down this morning. There are a couple of things I noticed on the chart, just in terms of lines, that we've shortened the downward thrust. Also, we had a little spring, and we've got a falling wedge. So this is an important pullback. It caught my eye yesterday, too. But the NASDAQ has held so far on top of the first high.
Yeah.
And on top of the ice line. Oh, no. That's not the ice line. Ice line is right there. Not much difference.
Yeah, what I'm seeing here, David, I'm going to try and get long again. I've already been long once here. I'm just going to try and get another long trade in. But I'm waiting for a pullback, and it's got to be clear. I mean, looking at where we're at, it's trying to break that 3184 level, but it looks like it's going up on no demand at the moment. So I would suspect they're going to come and retest. See, I don't want to get
only 600 contracts on this upwave.
Exactly what I'm seeing. I've got the Weis wave on the other computer, and it's showing me that it's going up. And in fact, in a minute, if I can, I'll take the chart back from you and show you what the VSA signal says. It's not complete. It's got a minute to go, David. So we'll wait. If it completes, it would make sense to me there that they're going to pull the market back down and retest, because there's a lot of volume on that first bar. I'm looking at a 3-minute chart of the NASDAQ. If you look at the pullback, the big bar at 14:36 mine time, which is going to be about 30 minutes ago. When you see a lot of volume on these two bars, we've got a very good reversal, and you know, when you see a 2-bar reversal and there's a test almost immediately afterwards, the market can shoot straight up. I mean, it's very strong.
Yeah,
it's very strong. I just want to see where it's going to. You don't want to chase the market when it's going up, because if you buy on an up, you don't chase it. You let it come back and it'll give you a trade. But there was
this is an important spot because the thrust might shorten here.
Yeah.
And the volume is still less than the 2300, but we're awful close to making a new high on the day.
Yeah, it's bullish, all right. Yeah, I've got one of my favourite signals at the bottom here. I did go long, but I came out the trade a bit quick because I thought it was going to pull back, and it hasn't done it, which is lovely about trading, isn't it? Just when you think it's going to pull back, it doesn't do it.
Yeah, I know.
It's too bullish, but it's going to look. The key level at the moment is going to be 3184.25. That's where this market's going to want to test, and if it breaks out through there, it's going up. Now, I've just seen we've got it's not no demand now. We've actually got on that next book, a 3-minute chart, we've actually pushed up with quite healthy volume. So now we're looking for a pullback down on very low volume, and I'll see if I can get long again. David, a couple of questions coming in from people. Is the Weis wave, what charting packages is the Weis wave currently available for?
It works on TradeStation, multi-charts, the old multi-charts, not the new .net.
Yeah.
It works on Metastock, it works on NinjaTrader, and it works on MT4. Okay.
Is it available for Infinity charts yet? Infinity.
Not yet.
Okay, I think we might better help you with that one, David, because we've got a lot of people who are waiting for that. So I'll talk to you about that afterwards. I'll Skype you. Now, here comes the pullback. So tell me, David, on a 3-minute chart what you're seeing on the Weis wave, and see if it comes up with one of our signals here.
Well, we definitely shortened the thrust, and the upwave volume was the smallest during this whole progression. We had volume of 3,900, 25, 1,800, and 1,100. You can see that green volumes are declining, but we don't see any supply.
No.
Where are you interested in buying it?
Round about 3181 at the moment is where I'm looking. Well, it could even be now. I mean, this next bar's got to fill. It's got 1 minute. I'm just going to put my trading order in now. So let me just put the dome up. I want to, again, you want to buy on a down bar, preferably on low volume. There's no supply really. It's quite healthy. It looks like it wants to. It looks like it wants to push up, but it's just timing the entry. Okay, so I've got 46 seconds here for this next bar to fill.
I see.
And then I will have a decision to make. Okay, let's have a look. So the volume on this pullback looks like it's going to be the lowest of the session.
Yeah.
So
far it is.
It's right. It hasn't produced a signal on the software, but it's definitely a test. Okay, I'm not going to do anything just yet. I'm going to be a bit patient here because it's not particularly obvious at the moment. It's right at that resistance level, and you don't want to go long right at resistance, because what I think I might do is put a buy order just above the resistance line and see if it pushes through on high volume. So 3180.
There's the resistance line right there.
Yep. Yeah, that's it. Yeah, you got it. Right up there, about 3184.25.
Yeah, it's the high of the day. 25, yeah, 3184.25.
That's exactly what I've got. Yeah, so okay, now this next bar that's forming now, David, is going to be very important, because that, I think, is going to be the test. So it's pulling back to 3181, which is really where I want to try and get in if I can. Okay, there it is. Now it's pulled back. Now we've got to watch the volume, everyone. I'm looking at a 3-minute chart at the moment. There's a minute and a half to go. It has pulled back, which is what you'd expect. So, and let's see what the Weis wave tells us now as well on this downward pressure.
The volume is heavier so far than the last two down waves.
Mm-hmm. There's nothing obvious at the moment to go long just yet. See, if you go long at resistance like there, this is what happens to you. They immediately mark it back down. So you've got to be real careful with that, because you can easily get stopped out. But you do want to buy on a down bar. Okay, so we're just watching this now, just being patient. Pedro says the notes look like they're, the T notes are pulling back as well.
Yeah.
Do you see anything obvious yet, David, that you'd trade?
On this pullback?
Yeah.
No, not yet.
It's not obvious.
I see on the upwave we had the smallest amount of upwave volume on the last upwave.
Yeah.
It was the shortest wave, the least amount of time, smallest distance, so it looked tired, so we're having a pullback. If I had to pick a number, I would look at the crisscross area, is what I call it, right here. This was a high and this was a low that pulled back on top of it. So that level is 77.5, but it doesn't have to do it. I mean, it's just a thought.
Right, well I've just got a no supply indicator on the 3-minute chart on that pullback, which means if the next bar closes up, then it may well push up again.
I see.
Okay, let's go. Let's put this in. So what I'm looking for now is this next bar to close up at 31.80.5 if it closes up there.
It seems to be holding.
Yeah. I'm just trying to get a fill here. Just bear with me. See if I can get filled. Yeah, it's right on a support line here. Okay, so I'm filled. So now we've got basically this is almost like a test in a rising market. And we're looking at a target here, but back up to 31.84. Once it breaks 31.84, we could get a runner here if it runs.
There's no reason why it shouldn't. The daily is plenty strong.
Well, we've got two VSA signals below us, which when completed with this last indicator completes a VSA sequence for me. So now it's a question of if it now makes its move. And sometimes it does, sometimes it doesn't. If it does, it'll attack that 31.84 level. What are you seeing on gold, David? Quickly, someone was asking. What do you think?
Let's see.
Just while I watch this NASDAQ.
Not much to say other than it's decidedly bearish.
Yeah, I think so too.
We've broken the uptrend line. I thought we were pulling back and holding in this area. We had a lot of volume on this bar, and thought we were in a potential spring position. So there's room to go lower.
Now, if we get an upward move on the NASDAQ here, it'll probably be on fairly good volume. You'll probably see it punch through that 31.84 level. Okay, and Brian's telling me the Aussie's on the move as well. Let's just have a look at the bigger time frame then, because Grigory's saying on the 15-minute chart. Yeah, well, you know, I'm looking at the 15-minute chart there, and I have to say, it looks like there's a lot of strength in the background. And I have to say, on the hourly chart, there's strength as well. There's a shakeout there, no doubt about it. It's a question of whether they just punch it through this whole top here.
Yeah.
Okay, so I've got confirmation on the 5-minute chart of what I was seeing as well. And here we go. Okay, so I'm still long, by the way, David, FYI.
I know.
Yeah, I've got a fill there. So let's just have a look at the 3-minute chart and see if there's any evidence of any supply present. Not really. I mean, it's the only thing I can see that they could do here would just do a markdown for more buying. So there's nothing here that tells me that the market wants to come down, but it's like anything to do with trading. You've just got to watch the chart and see what happens. Right. That's it. That's what trading is. You know, it's if you catch the runner, you catch the runner. Use a tight stop, which I've got.
I'm looking at the 500 tick bar chart again.
Mm-hmm.
The S&P is not doing much.
Yes, Pedro, I am trading the U contract, correct. Have a look at the Aussie quickly, David. I'm just looking at that as well. There might be a setup on there as well, potentially.
I thought I had it here. I must have taken it off.
Yeah, it's
hold on, I'll put it back up.
Pushing up on high volume, and you've actually got it's pushing up to the underside of that widespread down bar. That's going to be exactly where it's going to encounter resistance, which is exactly ironically where my stop is. So I may have to close that position out. So it's pushing up, but it's again, it doesn't look particularly strong. It's got that. It's a difficult one to read at the moment. It is pushing higher. There's no doubt about that. The Aussie's going up at the moment. Yeah.
Yeah.
Yeah. Have a look at the Aussie.
I'm setting it up again.
Okay.
Well, you had a little spring down below. I need to see what the volume is on the up wave. I need to put the volume in. Yeah, the Aussie's got good demand under it.
Yep.
It was preceded by a little spring. You know, the first resistance area is what we broke underneath, right in here. We're approaching that now. Where's your stop on the NASDAQ?
3178.
I see.
Yeah, I've got a fairly tight stop in there. If it breaks out, it breaks out. If it doesn't, it's a small loss. You know, it's it's sort of pausing, isn't it? It's just sort of pausing for judgment, as they say.
Yeah. It's trying to consolidate right here.
Yeah, yeah, that's what I see. I think we're going to see a no supply bar here on this this next bar by the looks of it. clearly testing that big high volume spike that when it moved up.
Yeah.
That's what I'm seeing anyway. That's what VSA is telling me, that they're testing that level.
Uh-huh. Hey, you're testing this big wide price bar right here.
That's it. Here we go. They're trying to push it up now. Yeah. Pedro said it's a bit like pulling teeth. Hey, trading, Pedro, is about patience, understanding the chart, seeing, I mean, I'll show you the principle in a minute, the setup, and I'll show you the trading ladder as well, so you can see that I'm actually in the trade. But yeah, it is, sometimes it takes time for it to move, but sometimes it can explode. That's trading. You've just got to learn to be patient. I've got a target in at 3184, Phil. 3184. Because that's where the resistance is going to be hit. So it's going up on fairly light volume at the moment. It's not really a lot of push.
Right.
That's the only concern I would have at the moment, is there's no real oomph about this trade at the moment, but it's working. So,
well, the best thing going was this 600 contracts here with no supply at all.
that's exactly what I saw, David. That's why I went long. Sorry, someone's asking, can I show my trading ladder? Sure, I'll give David the chart back afterwards. Absolutely, be happy to. There you go. There's my target. There's my stop. I'm long 3 contracts here. And what I'm going to do now, just to be clear, is I'm going to actually lock in some profit up here by moving the stop. We're going to get fill here by the looks of it. Can everyone see that, by the way? But I'm just going to take that profit right there because we're close. There you go. It's $200 in 15 minutes. I always make money with you, David.
I know.
No, that was a pretty good trade setup. In fact, what I'll do, can everyone see that, by the way? I'm not sure if that's projecting. Now, that's a real account. Yeah, that's 4855. And it's going to hit resistance. So I had a target. We're probably going to see an upthrust here, actually. That's exactly what happens. That's why, you know, you've got a clear principle here on the 5-minute chart. And I was long there from 3180 up to 3184 on the NASDAQ. But it's, David, I mean, when you see no supply with strength in the background, that is a very, what I would call a very high probability setup.
Yeah.
I mean, you know, you'd have to be a poor trader not to, and yes, it's a bit like pulling teeth, exactly. Yeah.
Well, it takes patience, but this was the ideal place. Are we looking at my screen or your screen?
At the moment, I think I'm showing my trading ladder. Let me just show them my chart because can everyone see?
Right.
Can everyone see the trading dome? That's the Infinity AT platform. Can everyone see that? And then I'll put the charts up. Okay, so let me show you the trade setup. I was using the Weis wave there with the VSA indicators, and now I'll explain it to you and how we made that money there. So that trade setup for me is very high probability, but I know I'm at a resistance level. Can everyone see the 5-minute NASDAQ chart, by the way? And I'll explain to you. I actually, David, I'm not sure you're aware of this, but we've programmed into the Infinity platform a way of actually getting trade alerts, okay? So you can see here, I'm actually getting email alerts telling me the sequences on the NASDAQ, on the gold, on the silver. So I know there was a long trade set up there because I got an email, which makes life a hell of a lot easier, doesn't it? So let's look. Yeah, so what it does, David, it's looking for what we call sequences. Basically, very simple. It looks for ultra-high volume followed by low volume, okay? And the guy that's programmed it is in this room with us. His name is Grigory. He's based out in Russia. So if you want to say hello to him, David, I'm going to introduce you to him at some point. His name is Grigory.
I've heard from him before.
Oh, you think you've talked to him? Yeah, you may have, yeah. So what do we see here? Okay, so first and foremost, I mean, it's probably more obvious on the 3-minute chart, actually, if we look at that, because that's where the alert came from. So what do we have down here? Okay, 2 widespread down bars, okay, on an increase in volume, but this bar catches my attention immediately because it's got climactic action, which is a very big signal, number 129. So the software picks that up, all right, and says you've got 129 climactic action. So the next bar needs to close higher, okay? So there has to be a downtrend in place. If you read the dialog box, there should be a clear downtrend in place. Weak holders will eventually panic and sell, and that's an opportunity for professional money to buy. So here we immediately get a reversal. Now this signal is programmed in, I've programmed it in, to send me just a 1 email alert that sign of strength 99 has arrived. It's an incredibly strong signal, because what that's telling me is all that pressure on that volume has to have been some buying coming in, some demand coming in. So you've got 2 principles that have appeared, 129 here and 99. Now, if you look at the Weis wave down here, you're going to see that we've actually got demand coming in, and then this bar here, there's lack of selling pressure. But I didn't go long there. Now, can anyone tell me why I didn't go long at that point? I could have, but I didn't, and there's a reason I didn't. Does anyone have any idea? Exactly. Look at the colour of the diamonds here, all right? If I take the trending system off in Trade Guider, let's just remove it. You can see I've got in the background an upthrust. The market's fallen because of it, but the diamonds are still red. I want to see a change in behaviour. Here I get it. 3 green diamonds. That's my rule. The market's marked down. The volume is less than the previous 2 bars. There is my signal, number 199. That is confirmed, and my order was filled on that bar. And I actually took my profit at 3,183. So we're up here now where we might get more no demand. Now, David, that was the trade I took from this bar here up to the top where we've hit resistance. Yeah. I think I'm also going to put an order in above here ready for a breakout. Okay, now it looks like we've got filled again here. So let's wait and see. Did I get the fill? No, not yet. We are in a danger point here because we've got this old resistance level to the left. So this could break out higher, but now actually I didn't get filled. I'm going to actually cancel that, and I'm going to put an order in when I see another no supply bar, which is very much like that. So David, could you show us the Weis wave at 15:09, which would be 9:09 a.m. Chicago time, as that signal appeared? I've got the Weis wave on another computer here, but it's not broadcasting, but David can show you it. Could you just show us the wave, what it showed us? And that's the reason I took the trade on this down bar here. And it's at 9:09 Chicago time. I'll give you the charts now. So
which time frame is this?
It's a 3-minute time frame, David. And I'm giving you the chart now. So far I've taken 2 trades in the NASDAQ, both long. One was for a small $30 profit. The other one was $180. Sorry, $170. Okay, over to you.
Okay. Well, I mean, this is the same chart. This is the no demand bar right here, or are you talking about up here?
No, I'm looking at that's exactly where I went long. Right where you see that pullback there, and I think it was on the 6. Yeah, it pulled back, and I've got no supply with a target at 3,184, which got hit, and now I'm seeing potential for an upthrust at that level.
Yeah, potential upthrust. Yeah.
Yeah. So that's why I took my profit and took it off the table.
Well, I mean, there was, as I said earlier, what I liked about it was that we pulled back into the range of this big vertical bar here. And I like to see markets test those vertical accelerated areas. And that's where we nestled in here. And then you notice right here we had only 600 contracts all these other down waves since 9 o'clock this morning. We haven't had that low a volume on a down wave. That 600 told me there was no supply.
That's it. That's exactly it, David. That's it, where I decided to go long.
That was perfect. And then you notice that this bar confirms it with an outside upward reversal. You took out the low of the previous two bars and the highs of the previous two bars and closed near the high of this bar. So that made it even more impressive, conclusive that we were going to do better.
Yeah. This is going to go higher now. I mean, we've just had another test. It's not up thrusting at the moment. It looks like it's going to push up even higher. So
yeah,
wait for the next pullback. But that's how I use the Weis wave with VSA. You see, I had a VSA signal at the same point as the Weis wave confirmed what I was seeing. I had strength in the background, which is important, and I had an email alert telling me that you've got a 2-bar reversal followed by no supply. Once you can read these charts, you can make good trading decisions. And I can tell you categorically, David and I have traded now, I think this is our 8th time together. I've always taken live trades. I've never lost a trade. True, David? I've never made a losing trade when I'm trading with you.
I didn't want to say it until after you booked the profit. I didn't want to jinx you. But
no, there was no jinx. That was a high probability setup. And let me explain why. I don't often talk about this publicly, but I know when the Federal Reserve are putting money into the system, there's a website that shows me today there's a significant amount of money going into the markets. And I know a lot of our mentorship students, I run a mentorship course every month, and we've got 15 students that are in here now. Remember the setup, guys, that I told you about yesterday, which is the 2-bar reversal? That's the signal I took, because it's the strongest. You know, in VSA, you've got 4 very strong bars. You've got bag holding, which is a very high volume down bar on a narrow spread with the next bar up. That's immediately a long trade. And then you've got the 2-bar reversal followed by the test. But what I was telling our mentorship students, David, yesterday about the Weis wave and also the 2-bar reversal is a 2-bar reversal actually often stops a trend completely. It just reverses the trend. So we had a big pullback this morning, and it immediately was buying. The Fed have pumped in today just over $2.75 billion into the market, and it's buying there. So why would I be short? Absolutely. So there's a lot of questions coming in here. Let me just see if I can answer them. Cesar said this is very good education in real time. Good, thank you, Cesar. Yeah, we do everything in real time. When David and I do seminars, we you know, number one, we do it in real time, and number two, I personally always take trades if I see them. You know, if they're there, I'll take a trade. I won't take a trade because you've got hundreds of you here. I won't take a trade just for the sake of taking the trade. It has to be a logical trade. The Weis wave has to confirm the VSA principle. If it doesn't, I don't take the trade. But in that instance, the probability of moving to 3184 was very strong. And David, you know, let me ask you a question. A lot of people think you've always got to be right when you're a trader, that you have to be right on every trade. I'm not right on every trade. It's all about probabilities, isn't it, David? Trying to be right.
Right. That's all this is probabilities.
Exactly. It's just probability. Exactly. What about the bottom reversal? Is this a high sign of strength? Absolutely, Edward. It's a very, very, very high probability. Sign of strength number 57, okay, which is, David, can I just take the chart quickly? And we'll wrap up here in a few minutes. And I think Steve Phillips is in here as well. Steve, do you want to put your mic on? Because I can hand over to Steve, who can do some more live trading with you as well. He runs our live trading room. Are you in here, Steve? We have recorded it, Danny. Yeah, absolutely. Danny's one of our mentorship students who's in with me at the moment. Don't think Steve's in here at the moment, actually. Oh, well, not to worry. I thought you were in here, Steve. Yeah. Okay, well, we're going to wrap up anyway in about 7 or 8 minutes. But let me just very quickly show you something. Okay. All right. So the question came in, how did I get the email alert? Okay. Right. Well, I've been showing you today on this particular screen the Trade Guide RT software. Okay, the real-time software. Okay. And Trade Guide RT runs with eSignal as a data feed. And you can find out more about that by just contacting either Ken or Richard at Trade Guide, and they'll help you. Now, we're going to send you all an email after this event with the details of how you can get the Weis wave, how you can get the VSA plugin. But let me show you how I got the email alert on that trade setup, because it's important. Now, first of all, I've got a special dedicated email account for my alerts. Okay, it's called alerts@yahoo.com, and you can see them coming in thick and fast. Okay, I didn't open all of them because I was focusing on one market, but the one that I was alerted to here about an hour ago was a setup on the NASDAQ to go long. Okay, I then look at the Weis wave on the second machine. I'm seeing a reversal. Okay, so I've got a widespread down bar with the next bar closing near the top of the bar. Sign of strength 99, I have programmed in as an email alert. So I get an alert telling me there's a reversal. Now, if there's a reversal and the Federal Reserve are pumping in a ton of money into the market, they're buying on down bars. Smart money buy at lower prices. So I watched this trade set up on the 3-minute chart, and the diamonds turned green just here. And I always wait for the third green diamond to appear. That tells me we're changing trend. The market comes down, but watch the volume, everyone. And this is confirmed beautifully with David's work. Look, strength in the background, a pullback on light volume, a green indicator with green diamonds. I need 3 on the smaller time frames. I go long because the next bar here filled me. I put my order in right on the close of that bar and got filled. We come back down. I'm under a bit of pressure here, but it goes straight back up. So my risk was actually very minimal on that trade. I had a risk of about $80 and I made $200. And I came out at resistance. And at the moment, it's marked down. It could easily push through here. There may be another trade set up for my mentorship students this afternoon. We're going to get together here in about an hour and 40 minutes. And I think there will be another trade here. I think there will be another long trade here because we're trying to break out. So we will get another pullback. So what I'm looking for is that setup over here at 31.84. I then look at the Weis wave. I make sure it's confirming what the VSA principles are telling me, and I take the trade. And it doesn't, I mean, you know, when you've got the markets moving like this, it's the days you make your money. When the market is whipsawing and chopping, I don't trade it at all. Now, let me show you the actual alert system, if I may, and how that works. And you should shortly be able to see my screen. Can everyone see? You should be able to see the charts just here. Can you tell me when you can see the charts? It may take a little while to come through. David, can you see that?
Yeah.
Great, okay. So what we've done here, and I don't think you've seen this, David, is we've programmed it, say we, my colleague in Russia, Grigory. Here's what we've done. Now, I'm going to show you the NASDAQ. All right. Okay, and you're going to see here. Okay. Can you see that, everyone? You should be able to see the alert. Now you see that the bars here are green, 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 green. That tells me here that the trend on the 15-minute, the 60-minute, and the 240-minute bars are up, up. So do I want to go long or short, do you think? When there's an uptrend in 3 or 4 time frames in a particular market, do I want to be long or short, do you think? Do I see red signals? Sure, I see red signals, but I'm not going to short them. I'm going to look for indicators where there's signs of strength. Okay, now you can see this block here. This has picked out an alert. Now what happens is I then get an email telling me there is a principle. I've programmed some 90 principles now into the alert system. I can scan in real time as many markets as I want, including stocks, because I use the Sierra charts package for that. I can scan all the futures markets. So at the moment, I'm scanning the ES, the 10-year note, the Aussie dollar, the Canadian dollar, the crude oil, the Dow, the gold, the euro, the NASDAQ, the gas, natural gas, the pound, the Russell, the silver, the dollar, the yen. I'm just about to add the crude oil on here. And I'm using a pretty basic computer, nothing smart and fancy. But what it does for me, it takes out all the guesswork of finding the trades. What, David, do you agree? One of the most difficult things about trading is finding, as your book says, trades about to happen.
Right.
And you know, if you read David's book, it's a superb book. You'll find that trades, when they're about to happen, come in when volume appears. Read David's book. I recommend it. And what it tells us and what the sequences look for are ultra-high volume bars followed by low volume bars into the same area. And that's exactly what we've seen today. We've taken a live trade, 2 of them in fact, and we've seen principles appear in real time, not in hindsight, trading real money using 2 methods which complement each other, which is why I work with David, the Weis wave and volume spread analysis. And once you have mastered this, I'm sure David would agree, you have that knowledge with you, David, for the rest of your life, and it becomes enjoyable to trade. You can probably tell I love it. I love what I do, and obviously love working with David. It's great. So, David, what advice would you give to anybody here that's thinking about, learning the VSA Wyckoff method?
Well, that's what I tell everybody about the VSA method, is that it's a great way to learn these principles. Having these messages come up, it's a number 99 or whatever number you call them, I forget. But this is an incredible teaching and learning tool. It inculcates the message of those kinds of behavior and gives someone a great foundation for learning the Wyckoff principles. And now that you've created this monitoring device that helps you find the trades that are about to happen in a list of markets, that you don't have to be scanning from one to the other. You've got a very powerful array of indicators. Very good. I don't think there's anything quite like it.
Yeah, well, it took a few years to put together, David. But
I'm sure.
what I really want to do now, and I've got a lot of people asking me, is get the Weis wave put into the Infinity platform that I'm currently using, because I'm having to use it in the Ninja platform, and I like to use the Infinity chart. So I'll Skype you afterwards, David. I've got some suggestions on that, and I'll talk to you. But what we'll do, let me just see if Steve Phillips is here. Steve, are you here? Can you put your mic on if you're in the room? Otherwise, I'm going to have to close the room out. By the way, have you all enjoyed...
Good afternoon. Good morning. How are you doing?
There you go. Say hello to David.
Good morning, David. How are you doing?
Okay, Steve. How you doing?
I'm doing well. Cruising along here.
Great job.
Hope things are going well for you.
Yeah, it's been a good, It's been a very good morning, as always. When we do stuff with David, good things happen. For those of you who subscribe to tradingthemarkets.com, our website, I'm going to organise with David a training session because I want to give you all an opportunity to try the Weis wave. I mentioned this to David yesterday. We're going to try and do something next week. But the website, if you want to subscribe, you can get the scanners, by the way, that I've just shown you for the rest of the month as part of your subscription. Just go to www.tradingthemarkets.com. It's $99 to subscribe. Let me show you the site. Someone just asked, where is it? It's just www.tradingthemarkets.com, and let's put that up there. You should be able to see that. So it's tradingthemarkets.com. And again, if you want to see some example alerts that we send out, I'm sending some more out this afternoon, just click on that button there and you can actually play the videos. You can try it on your iPad. You can try it on your iPhone. It works with all of them. And the alerts come out. They take about 10 minutes to get out, so they're all based on the emails that you've already seen. If you click on this button here, you can see we currently cover the following markets: Forex, futures, stocks, gold and silver, Australian stocks. We're going to add the UK market in next week, so we will be doing the UK market as well. Now, a couple of questions about the Weis wave. We're going to send you an email shortly with a link to order David's book from Amazon.com and details of where to get the Weis wave. So you'll get that email here in the next probably 15-20 minutes, so look out for that. I just say, by the way, for those of you that haven't got David's book, please go and buy it. You've got to read it more than once. It's very detailed. It's got actual structured setups in there. And I have to say, I said, my trading has vastly improved as when I use Weis wave together with volume spread analysis. And of course, that's why we work with David and recommend his work, because David, how long have you actually been trading the markets? How long have you been analysing charts?
Well, I've been involved in the markets for 42 years, Gavin.
There you go. 42 years. There you go. Reg, yes, Reg, it's up on YouTube. If anyone is interested in finding out more, we've got a YouTube channel where we post. I'm going to post this on here as well. If you go to youtube.com/trade guide, you're going to get a copy. We're going to actually upload this seminar. And what we'll do is we'll let Steve Phillips come in now, who runs our live trading room. And Steve has also worked with David. Of course, we did a mentorship course in the past. So yeah, we'll be absolutely delighted to assist you and help you. Some questions. Have I tried market profile with point and figure? I haven't, Victor, so I don't know. I don't know if that I've not tried that. No, I haven't. Good. All right, David, thank you very, very much. I'll Skype you back now.
I enjoyed it.
I really listen.
Enjoyed it very much, Gavin.
We always have a great time, and we're always making money, so that's good. And I think hopefully people can see the value in what we both teach. And what we'll do now, David, I'll Skype you in a second. But
all right, I'll talk to you later.
Great stuff, David. And by the way, everyone, we will send you a link to David's website, Weis on Wyckoff, so you can go and register for his newsletter. It's brilliant. Again, recommend that you sign up for that. It's free, and it comes out 3 or 4 times a week and gives you a very good idea where the market's going. We will email you the link for that as well. Okay. So thanks, everybody. Thank you, David. And I will
take care.
David, whatever you do, when you leave the webinar, don't click end webinar, just click leave webinar so we don't close it down. Okay. All right, Steve, over to you, everyone. Here's Steve Phillips, who runs our live trading room, for some more live trading with Steve. Thanks, everyone. God bless. Take care. And we look forward to seeing you again shortly. And if you subscribe to tradingthemarkets.com, it's $99.95. You will get the plugin that I just showed you for the whole month as part of your subscription. Thanks, everyone. Bye-bye.
Thanks for that, Gavin. I hope you have an excellent afternoon. Take care, David. Talk to you real soon. Good morning, everyone. How's everyone doing? Or afternoon or evening, wherever you might be. Good afternoon, Sam, Gregory, Cece. Good afternoon, Mark. Hey, Pedro, nice to see you. Hope all's well with you. Good afternoon, Abdul, Jack, Sen. Thanks for the kind email the other day. That was appreciated. Gillian, Reg, Soon, Lucas, AW. A lot of people here today. It's a crowded house.
Hey, Steve, just so you know, a couple of people just asked us, I just want to let them know, there is a web page about how you can actually get the Weis wave. I want to put that in here now, if I may, Steve, before I go. I'll put it in
Sure.
I'll put the page in the chat window, because there's several people who says, well, how do we get Weis wave? Everything's on that page there, okay? And there is a special offer on there now for everybody that's in this webinar. We had just over 960 sign-ups by the looks of it. So we will get the email out to you, but that is the link which has all the details about how to get the Weis wave. All right, everyone, take care. Cheers, Steve. Over to you.
Thanks for that, Gavin. Yeah, I would have kept reading names for a good half hour because they just kept coming in and in. What I'm looking for here is a possible. It's starting to slow down, and if the volume starts to increase here, I'll actually start to look to fade the market because usually, if the market can't get into a trend mode by now, it's going to chop around and come back. If you can catch trend early, notice Gavin was trying to get long earlier. It was early enough in the timing to where it could have possibly broken out and started trending higher, but usually